If you are having trouble renewing your homeowner's insurance, or if your price skyrocketed, you're not alone. It's quickly becoming a big issue. And tonight, we've got some new data that has just been released.
Yeah, it paints a not so pretty picture for homeowners looking ahead to 2025. And it's all linked to weather disasters and climate change. Here's environmental impact reporter Scott Broom to explain what's going on.
Look, if you can't get homeowners insurance, you can't get a mortgage, which means you may not be able to sell your house or buy a new one. Regulators say that is what's at stake here now as the scale of climate disasters continued to ramp up in 2024, spreading this financial contagion. For instance, welcome to the Montego Bay subdivision in Ocean City, Maryland, where it is now impossible to get homeowners insurance on the older manufactured and mobile homes here. Lori Benner's parents live in Montego Bay.
But obviously, it's an issue when we go to sell it.
I don't think most of the people are looking at this until it actually happens to them.
Fred Drummond got canceled in Virginia Beach.
You feel very vulnerable because you suddenly realize that if you cannot get insurance or the insurance goes so high you cannot afford it, then the mortgage company is going to call your loan due and it goes into foreclosure, you lose your house, and there's your life.
Okay, so no surprise, coastal communities are at higher risk, but a report released this week by the Maryland Insurance Administration finds the financial contagion has spread. Montgomery County, Prince George's County, Frederick County, all with double-digit jumps in cases where insurers are refusing to renew homeowner policies. Montgomery County saw an increase of nearly 48% according to the new data. Statewide, the total number of company-initiated non-renewals increased year over year from 2021 to 2023 by 62.34%, the report said. So why are insurance companies dumping customers even if they don't live near flood zones? Well, in that report released this week by Maryland's Insurance Administration, regulators say big climate issues are causing insurers to tighten up everywhere. For instance, by doing more home inspections and refusing to renew if they find maintenance issues or an aging roof. It's even more grim on a national scale, according to the results of an investigation from the U.S. Senate's Budget Committee released this month, which forced insurers to give up their data. One result is this map of regions where insurers are refusing to renew at alarming rates. The darkest areas are around coastal storm zones in the southeast and fire zones out west. Those dark areas include Virginia's Tidewater counties. The data confirm it is climate change that is driving increasing non-renewal rates, the Senate investigation said. And for those who have insurance premiums have increased 40% faster than inflation, according to the Senate investigation.
When they're ready to sell their homes.
In Maryland, the Insurance Administration just held online hearings because of the critical situation for at least 1,000 manufactured and mobile homeowners in Ocean City.
We just need help. That's it. We need more coverage for these people who truly are buying, what could be their last home.
Maryland legislators are expected to take up this issue in the coming session. In the meantime, in 2025, these new reports indicate you can expect more scrutiny of your property from your insurance company, like the age and maintenance condition of your roof, as they look for reasons to dump you, along with another hike in rates. All this thanks to the financial impact of climate change now being felt across the nation. As for Mr. Drummond in Virginia Beach, he did find an alternate carrier to insure his home at a much higher price. The people with mobile homes in Ocean City, Maryland are still out of luck. In Maryland, Scott Broom, WUSA 9.